Hey, good morning, everybody. Welcome to Thursday, July 23rd. So far, the week has been not bad at all as we continue to see the markets rise. Even this morning, we're seeing green ink. But what's today? Today, the big news is first-time unemployment claims. We'll talk about that and more in just a moment with Dave.
It's before 77 degrees at 105.7 Light FM.
Okay.
No, not that. Wrong button. Time check in on your money and see what's going on. Yeah, fruitcakes might not be a bad idea, though, for today, because what's up is down and what's down is up on Wall Street. It's kind of strange. Let's find out why it's so strange and go downtown to the offices of Statler Financial Services, where Phillip Statler is standing by. Phillip, good morning. How are you?
Hey, Dave, doing well today. Got a better connection. Got internet up and running yesterday morning, so I know I sound better this morning anyway.
Oh, yeah, you sound crystal clear, and I'm grateful to hear you for any number of good reasons. Yesterday on the market, on a normal market, we'd say, well, this is a really good day. Dow was up 165. NASDAQ was up by almost 26. Standard & Poor's up by a little under 19. If we were in normal times, I'd say that's pretty doggone good. With the wild swings we've had over the last few months, it was green, but nothing exciting. Boy, how standards change, don't they?
Yeah, it is. You know, we were prepping for my radio show yesterday, and we were talking about back in 1985, you know, the Dow closed at just a little under 2,000 points. And I said, you know, that's about half of what we see in a daily swing now sometimes.
Oh, yeah, it's down is up and up is down. We got a first-time unemployment claim number today. The usual Thursday report out of the federal government. I was looking at this and saying, well, they had to expect a pretty substantial increase simply because with the payroll protection loans running out, all the closures out in California as they start to contract, and New York throwing people out of bars and in-service restaurants again as they get some increases. 1.42 million first-time unemployment claims. That's the first increase we've had since March, but again, everything being relative, it's only 109,000 increase. You're telling me that the economists used a dartboard and they were actually expecting a decrease, huh?
Well, they're expecting 1.3 million, so which was basically in line with what we had been seeing. Yeah, I think you're right. That, you know, I've been talking about this for a while now. The PPP money is going to run out, and when that happens, we're going to see this number continue to increase, and that's what we saw last week. And so, you know, the Dow is the indexes are not liking that we miss that number. They're not in the red yet, but they were falling when that number came out.
And again, my reaction still remains, you know, what on earth were they expecting? I mean, California is actually talking about going back into a stay-at-home, shut down restaurants and bars last week because they've got a hot spot that actually is even worse than Florida's right now. I'm not surprised. I mean, I'm not happy, don't get me wrong, but, I mean, I would expect an increase in first-time claims even without the PPP loans running out.
Yeah, just on what we're seeing economically across the country, we're seeing more and more places being forced to close down.
Absolutely. As we look at stuff and look at the macro figures, that really is pretty much it as far as the stuff out of the government. I mentioned before we went on the air, I saw a column on one of my tip sheets that's just, you know, one of those what's up is down and down is up again. Some of the analysts are now referring to tech stocks, which have always been high flyers and high fallers as well when that happens. They're now calling tech stocks a defensive play in the markets because they're not as personnel intensive and they're not as heavily affected by the unemployment ups and downs as we go. But the idea that we start talking about tech stocks as being a defensive play for investors, like I said, none of the rules of thumb work the way they used to, do they, Phillip?
No, they really don't. I was looking at the calendar for next week, and next week's a pretty full week on macro stuff. I'm sure you'll be excited about that. But the one that stuck out to me is I think it's next Thursday. We will also get our first look at the second quarter GDP number.
Which I got to assume nobody's expecting great shakes on.
Yeah, nobody, you know, they hold that close to their vest yet. They haven't put out that number of expectations yet. That'll come usually a day before is when it gets posted.
Understood. And we're half expecting almost, well, we're assuming recession, or half expecting almost depression level numbers down, because this will be the quarter in which basically the entire quarter was affected by the coronavirus.
Yeah, it was. And so, yeah, we expect that number to be low.
Yeah, will not be fun. While we're talking about fun stuff, earnings season continues and a whole bunch of household names reported. I only get a selected big gainers and big losers list, but number one on my pre-market big gainer list this morning is Twitter. They must have gone gangbusters last quarter, huh?
Well, actually, that's not necessarily the case, Dave. They did see a jump in one of their key metrics that they look at. Their monetizable daily activity was up significantly, like over 34%. However, their revenue was a little short, and then they also had this huge loss that they had to write off this quarter. It's a non-cash asset related item, but it still caused them to be down significantly for the quarter, like over $1.30 loss compared to
Good Lord.
compared to a $2 loss that was expected. But that's why it's trading up, because it was a non-cash loss that they had to take against their books. They're trading up almost 6% this morning. And you look at the raw numbers, you would think, well, it should be down, but because it was again a non-cash item they had to write off, it didn't affect their cash flow, and their metrics are looking really good. So seeing a rise there in their stock price.
I was going to say they're toward the top on the volume leader pre-market as well, so it's definitely benefiting from, well, it wasn't really money type thing on the
Yeah, exactly.
One of those other household names reporting on earnings season.
So we had AT&T report. They beat by 4 cents a share, came in at like 83 cents. Revenue was basically in line. They are still battling the COVID-19 issues. They said it's impacting their business across all of their different lines of business they have, but they're trading up 1% this morning.
I would kind of expect AT&T to be one of the beneficiaries of all the staying at home and working from home. Internet, cell phone, they own DirecTV. That would sound to me like almost up there with the social networking companies.
I think maybe from a business standpoint, they probably are, but they still have employees that are getting impacted by COVID, working from home. That changes productivity. So even though their businesses may be doing okay from a revenue standpoint, they're still impacted from a productivity standpoint.
Okay, makes sense. Other stocks we got.
Well, a big name we have is Polti Group, which is the home builder. I found this one to be quite interesting. They beat by 28 cents a share, came in at $1.15. Revenue top forecast also. They've been helped by two things: low mortgage rates, which we continue to see. The other is a shortage of existing home inventory. So existing homes, we're not getting as many in inventory. So some good things there for Polti. They're up a little over 4.5% this morning.
Always happy to see a home builder doing well. So many other ancillary industries benefit from that.
They do. So let's switch gears. Let's look at airlines. So we got a couple more airlines reported. We got Southwest and American. Obviously, they both lost money, right? That was not, we expected them to lose money. The question is, did they lose more than expected? And they both did. Not by much, though. I mean, Southwest lost a penny more than expected. American Airlines, they lost about 12 cents more than expected. Both of them beat on revenue, was above what was forecasted. They've seen airline traffic continue to be depressed, but still moving up. They consider it to be depressed until a vaccine really gets found. So we got Southwest down 0.5% this morning. We've got American Airlines up 0.5% this morning. So, yeah, both sides of the coin there.
I know we're kind of in the middle of a flood of numbers for earnings season. High points for a couple more before we got to go.
So let's look at the automotive industry in terms of a couple, because we have AutoNation and Tesla. I know they're kind of two different things, but AutoNation is a huge dealership that's out there. They came in at $1.41 a share. They blew it out of the water 37 cents better than expected. Revenue was above forecast also. As they look at ahead, they're up over 7.5% this morning. And then you've got Tesla. Tesla, they came in, they beat by 3 cents a share. Revenue was above estimates also. Now I found this little thing interesting. They sold $428 million in emission credits.
Huh?
Yeah, I guess because everything's electric, that
Sure.
they build up these carbon credits, emission credits, and they were able to sell them, I guess, to other manufacturers. So that was $428 million worth there.
Make money to sell permission to do something that you don't do anyway.
That's right. So they're trading up a little over 4% also.
Well, we'll take that happily. Setting the table again in the morning. The place closed up green yesterday. Not big numbers by current standards, but everything up between 1/4 and 2/3% yesterday. A little bit of a disappointment on the first-time unemployment claims. How are we doing 45 minutes before the market opens up this morning, Phillip?
Well, Dave, it has made us have a little tinge of red in several areas, and we continue to see a negative impact to the indexes. So what does that mean? That means that we are down in the Dow and we are down in the S&P 500. The Dow's down 33. The S&P is down almost $2 right now. The NASDAQ has been falling since the jobs number came out, but it's still at up 0.4%, $41. So we're going to see a mixed bag at the open today. On the other side of the coin, commodities, we've got silver retreating a little bit, down 1.4%, still a huge number. They're $22.80 an ounce. We've got gold up 0.5%, $1,875 an ounce. Crude oil sliding again, down 0.75% to $41.58 a barrel.
That still sounds familiar, like where it was yesterday, though, doesn't it?
Yeah, pretty close.
Yeah, we're kind of getting into that trade it up during the day and then sell it off a little overnight, so we're into that trading range. Overseas markets, the Asian Rim, by and large, the fighting words we're throwing back and forth with China over closing consulates and industrial espionage online. That's kind of depressing the mainland Chinese markets. They went flat to a little bit negative overnight. Hong Kong, on the other hand, went up. Well, things are different across that little pond they've got between the mainland and Hong Kong. Japan was off by a bit. British and German markets, for the most part, modest green ink halfway through their trading day. Phillip, it's one of those times where stability counts for a lot if you're getting close to retirement. How do I find that for my investments and get a hold of you for advice?
Then give us a call at 863-382-0037. Join us every day where we repost on Facebook. All you have to do is search Statler Financial Services, like our page, follow us there, and you'll get updates on a regular basis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730.
And, of course, back here tomorrow morning, same time on Light FM. Phillip, thank you so much. We'll catch you then, all right?
All right, buddy. Have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. Wait.
Hey, folks, I want to thank you for joining me today. Hey, we're going to be off for a couple of days. We're out of place tomorrow and Monday. We will be back with you on Tuesday morning. Have a great weekend, and I look forward to seeing you on Tuesday. Take care.